George, you point out the market's really narrow, cash pays. So does that mean you stay on the sidelines and wait for a new entry point? What should investors do with this?
Great question, John. I don't think you ever time the market. Nobody does it very well consistently, and you got to make two good decisions, not one. You got to time when to get out and then when to get back in. But I would definitely trim some of these really concentrated big cap tech positions that have run so hard and reduce your risk there a little bit. And I would add to sectors that have lagged tremendously this year: energy, financials, international stocks. But it would be trimming along the margins and keeping core positions in place.
And Warren, you say the recession now is not a 2023 thing. It looks more like a 2024 thing if it happens. So does that mean, small caps are the way to play that? Does it mean commodities, cyclicals? What do you do?
Yeah, I think there's a whole host of trades that kind of flow from that overarching conclusion, which is that all the evidence points to the recession not hitting this year. We came into the year with the most anticipated recession on record, number of forecasters predicting a recession in the next 12 months, and it hasn't materialized. We're waiting for residential construction payrolls to roll over at 314, and that hasn't happened. We haven't really seen any progress on that front. You need an 8% drawdown before a recession. So I think the market is starting to catch wind of all this, and you get a rotation because of that. You get a rotation out of these kind of safe haven stocks into a more cyclical basket, into some extent into small caps as well. So you kind of, this rotation can power the market higher. I think it's positive for stocks over bonds as everyone starts pricing these cuts out of what's baked into the fixed income market. Fixed income market is quite pessimistic in what it's forecasting. So I think it's stock positive over bonds. And then within stocks, I do think it's a cyclical tilt.
George, investors need a strategy. So help us out with that, maybe refining or revisiting the strategy. Say you got some dry powder, right? And the numbers show us a lot of investors do. There haven't been a lot of ETF inflows, or as many as you might expect in this market run up. So if you've got dry powder, what are the sort of entry points in what sorts of areas in this kind of market? Not trying to time the market exactly, but say you're trying to average in.
Well, there was a great research piece that came out this week that said that, normally people are really concerned about value stocks and cyclicals during recession. And whether we get a recession this year or next year or the year after that, the research says that's really not the case, that value stocks don't underperform dramatically during a recessionary period. So I would not try to be too cute in terms of what you do. And I would buy stuff that's out of favor, that is really well priced, that has a good perspective next 1 to 3 years. And that would be energy, financials, and international stocks. That's where I would put new capital to work right now, if I've already got positioned to growth and technology and some of these things that have been on fire this year already.
Broad international index or some specific geographies?
I would definitely not try to pick geographies or any kind of active management there. I just pick an index and let it as cheaply as possible and let it ride.